Okay, hello everybody. I'm very happy to be here with you today. Let me start by saying that for those who did read my abstract, no, I'm not going to discuss states' relational duties because I'm going to discuss Islamic finance. So just discard what you've read. It's not mine anyway. Whenever I tell people that I'll be discussing Islamic finance, the immediate response I get is, oh, that's like interest-free finance. The answer is yes and no. Yes, it's interest-free, but you cannot really summarize Islamic finance into only interest-free financial practices. So this is the aim of what I'm doing today. I'll be presenting the practices of Islamic finance. This is a part of my overall thesis of like a practice-based approach to theorizing. I'm looking at the practice of Islamic finance and trying to come up with an Islamic distributive justice theory. I'll be explaining why I believe that Islamic finance practices should be considered as a good site and a very salient site for distributive justice. To start with, for those who are not familiar with what I mean with a site of distributive justice, it's basically what are the entities the theory is assessing and calling improvement of. Or as Abizadeh explains, it's the site of justice refers to the kinds of objects appropriately governed by principles of justice, that is, to which the principles of justice rightly apply. So what are the entities you're trying to actually assess and see whether they are just or not just? I'm not going to get into details about the sites of distributive justice because I really want to move forward to, I don't want to lose time on that, but I will move forward to Islamic finance. First, on the philosophical tenets, very, very briefly, Islamic finance is is essentially designed to be abiding to the rules and principles of the Sharia law, which is the Islamic law. The Sharia law is basically derived from the Quran, the main holy book of the Muslims. The Sunnah, which is like the lessons learned from the life of the Prophet. Ijtihad, which is the interpretation of the Islamic scholars on issues that are not fully covered in the Quran and Sunnah. And finally, the Ijma', which is how do they actually get in consensus, these scholars, on these issues they are trying to give answers to. So obviously, Islamic finance is an ideologically founded system. It's based on the philosophy, the Islamic philosophy. To know very briefly what the Islamic philosophy is, according to Nadvi, one of the eminent scholars of Islamic finance and economics, it's the philosophy or the concept of the right. So we're trying to figure out what is the right thing to do, and then we figure out what is the best action we should take to be able to achieve this right. So there are a few axioms or philosophical axioms that scholars have put forward that shape the philosophy or shape the way we think and guide the way we think when we discuss Islamic finance. I will go through them like really quickly before I go into the practices. The first one would be unity, which is like that the belief in God and that He's the owner, the creator and owner of everything, and anything that does not abide to the rules of Islam would not be accepted. This is important for to understand the concept of ownership because people are not, we do not really own anything. We are trustees, and this is the second axiom, the trusteeship. So we are God's trustee on earth. So we need to abide to the moral understanding and the moral issues that we need to abide to. Related to trusteeship is free will. So we are actually free-willed. We are not, let's put it this way, we do not have to do anything that we do not want to do. So the philosophical axioms or the Sharia is trying to guide us rather than impose anything on us. And this is also related to accountability and social responsibility because, again, if you're free-willed, you are the trustee on earth, then you are accountable for everything you do. You are accountable for your choices and you're accountable for how you achieve whatever you achieve. Also related to that is that it's basically an equilibrium, so it's not only related to our relationship with God, but it's more of a lifestyle, so it does affect our political, economic, and social life as well. We need to believe in the divine arrangements around us, so some things have to be accepted. Growth towards perfection. We always need to improve ourselves. We need to always aim for the better. And finally, there are objectives for Sharia. There are 5 main unalienable rights that the Sharia is trying to protect, which is religion, life, reason, children, and property and wealth. So that's also related to property and wealth. So these axioms that I mean, there's plenty of literature about them. I just tried to put them like really in a very summarized way, just to make you understand that these are the concepts that we use in order to figure out what is the right thing to do, and then figure out how to do them. So I will move on to what is Islamic finance practices. So yes, it's basically, it's trying to achieve what conventional finance is trying to achieve. So if you go to an Islamic bank, you'll find the same services there. However, it needs to abide to the Sharia law, and there are main prohibitions in the Sharia that derive our practices and that inform us on what we can do. So yes, everybody knows about a bit of misconception, or people think it's only prohibited to have interest because it's a form of an exploitation to the poor. But then the whole idea of interest has been revealed over a few years through the Quran. So at the very beginning, yes, the poor used to get loans, and they used to be exploited, and they used to get in debt, and that's why it was prohibited at that time. But then it kept on coming in the Quran that it is prohibited, when actually there was the treasury or Bayt al-Mal, where the poor didn't really have to get into a loan or to get a loan to fulfill their basic needs, because the government used to do that, the Bayt al-Mal used to do that. Those who were getting the loans were actually merchants, and quite wealthy merchants as well. They used to get quite big loans to be able to do their businesses and do to travel to do their business. And these travels used to take a very long time, and this is why they used to get big loans to be able to do their business. And the problem is, once they lose, if they lose during that trip, they would come into hardship. So the misconception is it's only prohibited due to equity in the case of the poor, but actually it's also in the case of efficiency for the richer people. So it's not only interest on loans, but only any excess resulting from any exchange or sale is actually prohibited. So transactions or practices like exploitation through unfair means, where you earn more than you should, that's prohibited. Rewards for making recommendation in favor of a person in the market, for example, is prohibited. Through barter exchange, which is, I know it's not relevant now when it comes to barter, but it is relevant when it comes to money exchange. So when you need to do money exchange, it needs to be in the same value, and it used to be used as a gimmick in order to calculate interest through exchange rates. So that's also prohibited in Islam. Another practice that's prohibited is gambling and uncertainty. Gambling is clearly mentioned in the Quran, so it's absolutely prohibited to do any gambling, and that includes, let me first go through the uncertainty. When I say uncertainty here, I don't mean like absolute uncertainty, because you cannot really avoid risk, in finance and in the economy in general. So the limited, or there is accepted form of risk. However, you need to avoid uncertainty in contracts that include absolute risk, or where you don't really know the outcome of the contract, or the quality specification of the subject matter you're dealing with, or the obligations of the different parties. So basically, to translate that into today's economy and today's financial practices, things like speculative trade is prohibited, short selling is prohibited, all these sorts that include like really high level of risk is prohibited. You cannot really perform that. And then prohibition of hoarding. We're always encouraged to spend. It's been mentioned several times in the Quran, but this is also relevant because money in Islamic finance does not really have a value. It's not like in the conventional system. In the conventional system, you can put it and you get interest, so it increases in value. In Islam, it's not the same. So money is only a means to a medium of exchange, where you exchange it for something else that has a value. And this means that to together, you cannot really have the money and not invest it, because if you have the money and you're not getting any interest on it and you're not investing it, and at the same time, I'll be coming in a minute to paying taxes in Islam, then basically what you're doing, you're giving your money away. So you wouldn't want to do that. So what you need to do is always invest your money, and this is a way of channeling wealth between the poor and the rich and between people. So I'll come to the taxes in a minute, but then first I'll go to the actual financing practices we use in Islamic finance. The partnership finance is divided between mudaraba, musharaka, murabaha. They are all forms of partnership. The first one, mudaraba, is like a partnership between capital and labor. So an entrepreneur would go to the bank and say, I've got this business, but I don't have the money for it. The bank would finance it, and then what happens is they share the profit and they share the loss. So in that way, the entrepreneur would not get into such stress that they have to get into profit, and if they lose, they would still have to pay all the money to the bank. The second form is musharaka, where partners get together, they get the capital, they do share in the capital with different proportions, and according to this proportion, they share in the profit and their loss. The profit could be according to a pre-agreed percentage, however, loss has to be according to their contribution in capital. So again, once you get into capital, you are responsible for what you're doing. You are, again, the responsibility of the person, of the decision they make. Murabaha is when you go to the bank and you want to buy something, whether it be a house, like you want to have a mortgage, or you want to buy a car or something. The bank would buy it for you. It's quite similar to how it works with conventional banks. However, the two main differences I would have to say is that the ownership of the item that you're buying gets to the bank, so the bank is actually the one selling to you. But what's more important is that deferred payment date can be extended, however, without an increased amount of penalties. So you cannot actually charge penalties on the person. So that's another way of making it easier for people when they get into Islamic finance. I'll go quickly on the exceptional ones, which is salam and istisna. These are practices where, for example, like farmers who cannot have like their crops in hand when they get the money. So it's a form of accepting more levels or higher levels of uncertainties for farmers. That's in the form of salam, and in istisna for manufacturers who are still manufacturing and needing their loan to do the manufacturing they're doing. Regulatory practices is with the Sharia boards. Every institution does have to have a Sharia board in it, where they agree to the practices of the institution, whether it's going in the right direction, whether it's abiding to the Sharia law, it's calculating the taxes they need to pay, and so on and so forth. I'll try to come to the parts that are more important. Economic and social development. We've got Islamic insurance, which is it's based on the partnership agreements. However, for the sake of insurance. However, I want to move to zakah, which is like very important here, because usually there's a misconception that zakah is more or less like charity, and it's not, because we've got charity, which is sadaqah, and we've got zakah, which is more or less like a tax. So it's not only almsgiving, because everyone is obliged to pay 2.5% of their wealth once it's been idle again for a year. So annually you need to pay for idle money that you have 2.5% out of your money. So again, I relate that again to what I was saying before. If you've got idle money and you're paying 2.5% every year and you are not investing it, basically, you are giving your money away. So again, the components of the whole system come together to make the distribution of wealth a lot more quicker between people and between different stratas of the society, and to make the partnership between the poorer and the richer parts of the society. Purification is like when an institution gets into a transaction with other conventional banks that are performing interest-based transactions and stuff like that. They need to give up the same percentage from their profits as a form of purification. So they're purifying. So that's why I think Islamic finance is a very salient side of distributive justice. And these institutions, when they were first established, they were established to abide for those Muslims who want to abide to their religious beliefs mainly. However, we cannot really say that this is the only reason they were established, because they do have social and distributive obligations that they need to fulfill as well. And why do I say they need to fulfill it? It's because these obligations are being transferred from the individual to the institutions once the institutions are being established. So basically, if there's no institution, I need to make sure that I'm paying the zakah, that I'm doing everything I can for the distribution of wealth and for the social justice. However, once these institutions are there, they need to take care of these, or to fulfill these social and distributive obligations in accordance to the Islamic teaching. So obviously, they also affect Islamic institutions need to balance between their social and ethical objectives together with their economic and materialistic objectives, because it's not accepted, and it's considered haram or not accepted, impermissible, for an Islamic financial institution to only consider the ethical aspects without really profit, or the other way around, just mainly to be focused on profit without the ethical conceptions or the ethical aspects that they need to do. So it needs to find this balance between both aspects. So it's not only about channeling resources, but it's also about production and generation of wealth. Obviously, it does also affect the relationship between the different parties within the society. So obviously, like, there's a partnership between entrepreneurs and capital owners, and it creates a form of more equality between the poor and the richer, especially when you know that it's been clearly mentioned in the Quran that this zakah, when given to the poor, it's given to them as their right, so they are entitled to it. So it's not a form of begging for someone to fulfill their basic needs. Zakah also has got a very interesting aspect to it that I think will lead me to my conclusion. Zakah should be paid to anybody who is not fulfilling their basic needs. However, if somebody decides not to work, they are not entitled to zakah. On the contrary, however, if somebody thinks they want to be full-time students and they want to get into full-time education, they are entitled to zakah. So again, this leads me to what I think is a conception of distributive justice from Islamic finance, derived from Islamic finance practices. It seems to me like there is a conception of the individual that they are self-motivated and genuinely interested in realizing their full potentials. That's one of the things that's essential there. And to me, the way it looked is that it's sort of fulfilling a sufficiency constraint, like egalitarian sort of justice, where they are the practices are working on two different spheres. The first sphere is the sufficiency sphere, where people are entitled to their basic needs. That's their right. They are entitled to it. And this is whether it's of their own choice or due to bad luck. And when it comes to sufficiency, it's not only sufficiency, but it's also mitigation. So it's a form of a level playing field. We have to get everybody to a level playing field where they can actually perform within the economy. So if they are capable of work but could not find work, from the zakah fund, they are entitled to get as much according to their own talent, their own skills, their own profession, to get as much until they get sufficient from their own work. If they're not capable and it's due to natural disabilities maybe, in that case they are to be sufficient on a life term, that is through the funds of zakah, to mitigate this form of disability. On the other hand, once people are on a level playing field, they are participating, they are sufficient, then inequalities within this sphere would be accepted, because you need to get into the accepted form of risk. You need to invest your money. You need to work hard. and the sort of inequalities that arise due to your own choices after you achieve the level playing field and after you achieve sufficiency should be accepted, because in that case it's due to your own choices and due to you are accountable for how you choose and for what you do. So I think that's my own perception of Islamic finance as a site of distributive justice and the conception of Islamic distributive justice as I can see it from the practice. Thank you very much.